The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White, on a June 9th, and a very humid one at that, at least down here at the headquarters of Technical Trading and Investing, TFNN.com. So we've got a market up just a tad, up 1.5 on the S&P cash as we speak, 1.6 billion shares after a evening of trading in the Asian Pacific markets and, of course, Europe already closing. Almost all of them up, much stronger in Asia, not so much in Europe, but good. And probably a day of rest here. There's been a little bit of discussion about what would happen with Apple when it split. It's up $1.56, which at its new price is a 1.7%. So we'll be watching kind of a lot of that and talking about it today. But, you've got some stocks that are up here a little bit and some a little tougher, some that came off with some volume here. I don't know if some news came across the channel. I've been watching one of the stocks we talked about and a caller brought up on Thursday, and we'll have to see what happened on that. I haven't checked the DIN yet to see what he did on it, but I think there's some stuff. At least he took a little money on it. So we'll talk about that stock and some others that are moving out here as we see a kind of a tepid market, but I think we're probably going to see a market that's up or down a few points probably into Wednesday. Wednesday will start the options expiration cycle, and that will take us, that's, of course, what we call Weird Wally Wednesday, or the first person to actually bring this up was a guy named Wallenchuk. And Wallenchuk posited pretty much before anybody else that there was a idea for option market makers starting in the late 90s go delta neutral into options expiration. Of course, it normally starts happening either the week before on late Tuesday or the Wednesday, and that is when the option market makers start making sure that no matter what happens in the stock market, their options positions are probably going to be locked. That means that they will buy the other side of the trade, either go long or short stocks. Always good for generally about 1% at least on Wednesday, either up or down. And then, of course, the market resumes its natural trading order. But there is a fairly high bias, and that bias is from the Wednesday close to the next week later Friday close, that it is higher than the low of that Wednesday 80% of the time. So normally Wednesday looks at and is a benchmark to look at for the rest of the next 7 trading days. So we're getting kind of close to that. Not a lot of volume, but I wouldn't say that that's certainly not uncharacteristic for what we have seen over the last week or so. Very light volume that we're getting in here, maybe just a little bit on light volume, kind of rolled over from 5 points higher. Probably not a big deal so far. But some of the stocks that have run a little interesting, so we'll kind of keep an eye on some of those. The stocks that I have long right now are all up for my purchase price, so that's about all you have to say. They were, of course, much higher earlier in the day. So we shall see. Anyway, as we get started, we always like to start with a little bit of history. Of course, we had the Belmont Stakes this weekend and almost the first Triple Crown since 1973. Of course, on this day in 1973, victory at the Belmont Stakes came to Secretariat and became the first horse since Citation in 1948 to win America's Triple Crown, the Kentucky Derby, the Preakness, and the Belmont Stakes. And one of the finest performances in racing history. So, kind of interesting to see that, it's been kind of a while since we've had a Triple Crown winner. And I guess came close, but no cigar on Saturday. And kind of like the owner coming out this morning and doing a mea culpa about probably not acting in the finest traditions of the gentleman's sport, as they call it, and asked for a little bit. Somebody asked them how fast horses run. I think the fastest a horse can run is like 40, 41 miles an hour for a very short amount of time. But yeah, I think 35 is probably in that range, 30, 35. I don't know that much about horses, except when they're, 150 and in a nice, light superbike. Other things going on around the globe right now. Amazon is getting into a online payments market, much like PayPal. They are going to be doing something slightly different than PayPal, but I think it may grow into their own payment services program. They are going to start going around trying to get a lot of smaller companies that don't have a great facility for finding low percentage bank card handling, and especially for businesses overseas where it is much tougher to send cash to. They're going to be working on anybody that has a Amazon profile with a saved bank card will be able to use it for payments for anybody under the umbrella of the Amazon Pay system. And really no word that I saw in any of the articles today exactly when this thing was rolling out, other than probably over the summer. But it is going to be different, and I mean different in the fact that PayPal is really good for a handful of really big companies, and it really looks like Amazon is going to go after the low-hanging fruit, which is the people that PayPal didn't want to really spend a lot of time with. And people, especially outside the United States, may make it easier for Amazon to convert people into buying products on their own platform. But it's going to be interesting. Amazon was down a little bit earlier on, but can't see a great deal of change as far as I can see that is directly attributable to this. And it's hard to tell whether or not they even move the needle, at least at this point. If even, let's say that they had the equivalent of PayPal right now, I'm thinking maybe it'd be worth 25, maybe 50 bucks a share. So maybe enough, but maybe over time something will come of this. And of course, we were talking about Apple's split today, and they're up $1.30 still. Although, they were up a little higher. So some decent volume, 54 million shares. Historically, I had a few people email me today, and again, if you want to come on the show, you always can by calling 877-927-6648. You can also email me at path@tfnn.com Monday through Thursday. Fridays, I'm generally in the office and don't have access while I'm on the air. But you can also post a message in the den. What do you do? Anyway, what I wanted to get to is I had a few people asking me, historically, is there any real bias for splitting? And the answer is it really follows the split and the personality of the stock before it split. If you go back 30 days, 60 days, 90 days, up to a year, normally if the bias was higher when the split happened, the stock normally continued up. And that was about 80% of the time. So you can say it's a fairly decent cause and effect that if the stock was headed up and it split, that normally it went higher and significantly higher by at least 10%, most of 80% of the time. Also, if the stock was headed lower when the split came out throughout the year, you had a huge bias also for it to go lower. So I would say the trend continues is probably the best description of what happens after a split. Probably one of the highest correlations to splits is a reverse split. If a company does a reverse split, and this has been through probably 1960, hasn't appreciably changed even in the last few years. That is, if there is a reverse split, it's still 90% a chance that within 2 years the company goes bankrupt. So if you want a high margin short out there and you can get it high enough and there's enough float, unfortunately these things tend to be rather wild before they give up the ghost. But pretty good chance of it going bankrupt. One of the few longs that I would probably never play, and that is a reverse split. The odds are so astronomically against you compared to any other kind of play in the market. Probably not worth playing. Got some other things. Turing test. There is some news over the weekend. If you're not familiar with what a Turing test is, the gentleman that helped solve breaking the Nazi codes was Alan Turing, also pretty much thought of as the father of computers in the in the world. Wrote a lot of papers and actually designed the first mechanical computer to break those codes from the Nazis. Posited, I think, in about 1948, that if you could build a computer that could fool somebody in another room that it was a person, then in fact it had become intelligent. Over the weekend, the first computer program to actually pass that test did so. It is I'm trying to remember, was it Poland, Warsaw, somewhere over there. Anyway, it did it, but there's a caveat, and we're going to get back to that after the break. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, we are back. We were talking a little bit about a Turing test and why it's probably important, at least in the technology sector we have. Everybody's been hoping one day that a computer would be smart enough to really not let a person know on the other end if it was a computer or a real person. Now, you can fool people, and they've been doing that since the mid-'60s. There was a program called ELISA, and basically it acted like a psychologist. Basically, all it did was trick you into thinking there was somebody over on the opposite side. In this case, these folks made a program that imitated, and its response were like a 13-year-old male. And the idea was you wouldn't expect a 13-year-old male to know everything. So if you ask him something, you're not surprised. So is this really a good test, or is it just a way of skirting tests as the way some people do? When computer speeds, especially processor speeds, were always the rage, there were a lot of programs that actually did nothing but test processor speeds. And of course, they made the processors run those programs very well to make them look good. But in real life, were they any faster using and doing a Excel spreadsheet or any other heavy math operation? The answer was no. So they looked real good in the tests. Did they operate any differently? For the most part, no. And this is a bit of the same kind of thing. So I wouldn't get too fired up thinking that today is the day that Skynet went self-aware and we are all nothing but pawns of a giant robot conspiracy. Not quite yet. In fact, if you played with this long enough, I knew a lot of the questions to actually go out and try to bust this thing. But the average person it could beat. But again, it was tricking them. It had no real intelligence. I think that the real proof of the Turing test will be when you can talk to something like a computer and it has some idea or some true intelligence behind it, not just being able to trick you that there's some kind of intelligence behind it. And again, it's like a psychologist for the most part. It says you'll say something or type something, and it'll say, well, how do you feel about that? Well, that's not good. Can you tell me more? It's all kinds of same kind of stuff that any kind of trance or one of those things psychics would do. It's a lot of cold reading, that kind of stuff, and the same kind of language that can be interpreted multiple ways, so that it always works out. But if you hear about that, not such a big deal out there in the world. Dollar General, of course, over the weekend put in a poison pill. And, of course, those poison pills were designed to keep people out. Oh, where is it at here? I think I got it. Where is it at? Oh, there it is. And we got to start playing it. I can't do a story without Carl Icahn now, the godfather of Wall Street. Anyway, of course, old Carl Icahn says that he's got a 9.39% stake as of the close on Friday. And, of course, he's moving the family dollar stores by saying he's working out a deal to sell it. Of course, they put in this poison pill, and I've had enough of the Godfather. Let's just quickly fade out here. There we go. But poison pills, although you hear a lot about them, I never really heard anybody explain them. I knew what they were from looking it up, but I thought I'd take a chance to just explain it, because I had a couple people also email me about that today. And what you do with a poison pill is basically say that anytime anybody gets over a certain percentage of shares, in this case it would be 10%. So if basically Carl buys any more stock of a size, everybody that already owns a share will be able to buy a share that would dilute his shares. And basically means that he really can't effectively ever get any more than 10% of the shares out there. And, of course, it just waters all of them down. So as he buys more, everybody else gets shares with a lower price. And it just basically round robin. This poison pill is good for 1 year. And the reason for that when we come back. Again, you can give me a call at 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN program, TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern. And you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Anyway, we're talking a little bit about poison pills, and not a lot of people ever really get in deep. They just say, hey, it's a poison pill. But the whole idea is to make sure that you don't get enough shareholders to outvote the board and basically take apart the board piece by piece. The idea, whether it's real or imagined, is that if they had to negotiate with a handful of people that were getting a whole lot of cash and losing their jobs, they'd ask for more money. In reality, it can be a lot more difficult with the CEOs getting golden parachutes out the door to allow the buyout to happen. And in the most part, it doesn't hurt the shareholders, although in some extreme cases, this has gone to extremes where the ego of the CEO and or president of the board or board members ended up taking over and screwing the people over. Of course, if you're a member of the board and you get a big, fat, cushy check every 3 months for attending board meetings that take you all about an hour and a half, and then you're probably on, well, I don't know, 10 different boards of 10 different public companies, you can make a huge amount of money, kind of like our previous Secretary of State, Powell. He's one of these guys that probably makes a few $1 million a year by being on the boards of several people. So sometimes if you vote yes, you're basically cutting yourself off from that check. And for a lot of times there's no upside to doing so. And this makes it at least more problematic, but normally they give some kind of golden parachute to give those guys the impotence to get out of it. And, of course, all of this is just negotiating tactics for the most part. Hopefully they do operate in the best interest of the shareholders, but not always. But that is what a poison pill is. This one's kind of different in that it only lasts 1 year, which I think is kind of interesting. So, what do you think? Anyway, it is a mad market. We're off about 2 whole points on the S&P cash, 1.83 billion shares. And we're going to start looking at some stocks. And wanted to bring up one. We had one of our callers, John from Philly, call in. And had a nice day out here for his stock. I think he sold part or all of it. He did bring it up. I think it was one that I liked, which was this one. I said it was probably not a bad tip, and it went pretty much exactly where we thought that this thing was going to go, which is into this gap that was above. I think this is on last Thursday's show. And the only thing I disliked about this thing was that it didn't have a huge short interest. And this is probably a good explanation of why I like stocks with higher short interest. And that is that you don't just get a snapshot to cover out of these things. That normally they're going to hold them up 2-3 days with short interest. A lot of times you don't get that same kind of time, hang time, if you're talking basketball lingo, up here at previous highs. Of course, this was going into a 9 million share high from May 29th. And when we look at that, about 6 million shares so far. So not uncommon to see this thing trapped in a lower trading range. And John, the Philadelphian, I didn't think was looking for anything more than that. Let's see if he said anything in the den out here. Ka-ching. This one was down on heavy volume. You had to probably make a safe bet that this was going to be and come down and test one more time. This May 15th low at 25.58. But there was, the way the market was going higher, you're probably looking at a lot of these stocks retesting these gaps at least one more time. And that's what you got. The reason the trade looked good was that he was going to be able to put a stop in, I forget what it was, 50 cents or 75 cents or something. It wasn't much. And you were going to make basically 5 times what your stop was. So the risk reward was good. I thought that the chance of it coming up and tagging this was about 50-50. If you can make 5 to 1 half the time, you're going to make a good trader. And that's probably what did well for this. And of course, he's not one for hanging around too long at the party. I think if the party was over at 10, he's pretty good at being gone by 9:15, and that's part of it. But anyway, one of the reasons I said the only reason I didn't like this was this thing only had about 1 or 1.5 days to cover. There were a lot more stocks that had this kind of pattern, and I'm long actually a couple of them. And I'm thinking that just over time, if the market does hold up, I'm going to have a little bit a better opportunity to cash out on some of those for maybe a little bit more money. So a lot of times when you're playing these bounces, of course, and you're looking for that short squeeze, not too often that it doesn't last more than 2 or 3 days for margin players, get shoved out the door. In this case, if you don't have a lot of short in the market, they can reverse fairly quickly. And I think he saw that, and in the den he says, ka-ching. And I think that's all you need to know. Had possible shorts, if I can go back up here. Okay. I got a lot of messages in the den. There was somebody looking about possible shorts here. If I can get back to it, I'm going to have to scan to see what we have out here. LOPE or URI? LOPE. Now this thing's about where I shorted it last time. This thing's in a big asymmetrical triangle, and on LOPE, LOPE, An asymmetrical triangle is kind of like a big greater than sign. If you look at it, and if you basically put some big lines on this thing, trend lines on the top, on the bottom, they're going to point out here at about $44. Normally, when you get stocks like this with lower highs and lower lows, as they get back in, will come out to the apex of those lines where those lines meet. They go more than about 3/4 through. Normally, the move is a head fake, about 75% of the time. So what you would want on low would be a nice pop that doesn't last very long to the high side to short the thing before you went any farther. And the other one is URI. This thing has been defying gravity for a long time. And, it has picked up energy as of the last leg. It was very weak, probably about halfway through. You've had some big days where it really didn't go very far, but had a lot of volume and continued moving higher. So you're probably at the end of a 1-1 ABC out here. I just can't imagine or seeing any kind of signal out here that does say that you could short this just yet. Let's see. Let's go back and scroll back down. Open your okay. Yeah, all those stocks pretty tough. But I tell you what, there is an old chestnut in the market, and that is do not short a quiet market. And if you're talking about a market that's got a window of 6 or 7 points in the S&P, I'm going to call that a quiet market. And I want to start seeing something that tells me that this market has and is going to go more volatile instead of up just a few points. My call is that that's what we are going to get. We're going to get a stock market that goes up 3, 4, 5 points, down a couple of points, up 3, 4, 5 points, down a couple of points. So we're going to do 2 steps, small steps forward, probably 1 small step back. And my guess is that we'll continue to do that all the way through the 4th of July. If we can continue doing it, I think it happens all the way through the Alibaba IPO, and mostly because Ben Bernanke was unceremoniously fired on 60 Minutes. I believe the one reason that Janet Yellen is there is that she has promised to make sure that there aren't going to be any more cuts or any other real bad things happening before the election. Her one point is probably that she should be raising interest rates right now and will not until the election's over. And I think that was the deal with Obama and why we don't see Ben Bernanke in for yet another 4 years. So that's my feeling at the moment. I don't think we're going to find a lot. Maybe during the break I'll check. I'm trying to remember when the next FOMC meeting is. But unless you get some kind of surprise out of the FOMC, my guess is you are not going to see it until I think is there a December meeting this year? I'm going to have to look it up. And I think that's when you're going to get the first hint. But I think political pressure right now is going to be very hard on anybody at the FOMC to do anything different than the continued tapering of QE and the higher interest rates that probably come directly after the first of the year. And like I said, right now, I suspect that they should be doing it today and not waiting. But political pressure as it is probably going to be fairly big. So anyway, wanted to get onto a few stocks that were attesting previous highs out here. And some of these have rolled over slightly. Not a great deal, but slightly is enough. And that is Assurant AIZ. Let me give you the full profile out here on this. Let's see if we got anything else. Got a bunch of alerts. Nothing like alert. Anyway, Assurant provides specialty insurance products and related services in North America and Latin America. These insurance companies, I've seen more than a few of these up here with fairly light volume. When I look at Assurant, it's banging its head for the third time off this January 8th high at 68.70. 1.7 million shares, goes above it, does a reversal. The absolute next day on 1 million shares on March 11th, we've come back up here with 760,000 shares on Friday And same thing. Boy, this thing likes to give up the ghost. Now, today, what's the low? 60, we're close. You want to see this thing to confirm a close of $68.70, and we're kind of around that. So this is why I'm probably not going to be playing these stocks, but these are the ones that are probably going to be giving some of the best indications that we are going to see today. Another one out here is Ameriprise Financial, AMP. Okay. Ameriprise Financial, 2 million shares, and what we're breaking is the January 9th high, 116.30. 2 million shares. Went through that with 1 million shares on Friday, and we're still going above that today. And, of course, 339,000 shares, but a little hammer candle up here at the top. So I'm going to be watching that. One of the things I don't like is the energy down from that January 9th high back down to the February 3rd high. Had about 25-30% more energy than the low back at April 14th, back up to this high. And that thing came down on some fairly high volume, but came up and retested that high. It's broken it and held it without much energy out here. Another one doing the same kind of thing, Caterpillar. It's testing its recent high a little bit better. You basically had 8.8 million shares on the 24th, which is just a couple pennies up from the absolute high at 108.21. As we see the last 2 days, 4.2 million shares, 2.6 million shares, not a lot of energy busting that 8 million share high right there. And even if you use the more conservative volume on that high of May 13th, you still 4 million shares. You came close on Friday, but you really needed some kind of 4 million share day again today, and Caterpillar didn't get it. I'm watching for any close back below. Covidien, another one of these hanging out here at highs and starting to close back. Looks like this one's going to be confirming today. COV is the symbol on this. You had the absolute high on April 4th, 3 million shares. Where was that? 3 million shares going into the, March 28th. And even 2 million shares. You wanted to see, you got 1.7 million shares on the, April 4th. So as you go into these highs again, you wanted to see somewhere close to 3 million shares. Got about 1.8 million, 1.5, million shares. And of course, when I do these highs, you can't probably really see it very good, but there's an option in Art of Timing Trade Charts that you can click that will give you the highest volume within 0.5% of the high. And so when this thing's looking at that high, it's looking at the day of 328 that had 3 million shares. And I really want to be more conservative by doing this, by saying, okay, maybe it went a few pennies higher. But what was the maximum energy and the maximum price? And I put those two together, as long as they're within 0.5% of each other. We will be back in just a minute. Give me a call, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, I had a question at the end. When are the restaurants going to roll over out here? Certainly see Yum out here at a high with fairly light volume, at least compared to the last high. What we're looking at is the April 23rd high, $79.70 with 7.5 million shares. It opened that day much higher, of course, rolled over back up into that area at the same time. Last couple of days, 2.2 million, and today 1.8 million. Any close below there would be a sell signal if you were long. You probably want at least some kind of market reversal to actually say that. We're up basically half a point now on the S&P cash, 1.9 billion shares on the New York Consolidated New York Stock Exchange tape. So volume could be worse. We've had worse a month ago. So it's not all that bad, although we're not going anywhere real fast. And I forgot to bring our musical guest on today. Maybe I can remember where that is. There it is. On. I think this is the theme song for the market for the last few days. Anyway, the high in the XLF is another one that kind of has me interested out here. The idea is if interest rates did go up, of course, everybody is pontificating that would mean that financials would go higher. So is the question that this is just as high as they can go now, waiting for higher interest rates next year? Certainly, there's not a rush to get into these. I look at the last major high on March 21st with 91 million shares at 22.65 on the XLF, with 29 million, and what's called 30 million on Friday. Today, 19.4 million. Not a big sign of strength as we break these particular highs. But again, it's summer trading, and as long as we don't go up more than a couple of points a day, and this light volume continues, it normally can for a while. What you would want to see is some kind of nice, real big pop, like maybe 30 points on the S&P with no volume, and maybe a reversal, kind of like we talked about earlier on FEYE, which is a good example of where you give maybe half of it back or more in a given day. But this is a good example of what you like to see testing those highs. That is, the thing just goes up there intraday, gives it up, comes right back down, and it's over. Too many of these other stocks are hanging up here with little or no volume. And one of those is like Valspar. When we look at this thing up in the 76s, the first time was February 12th at 75.92 with just a little shade, less than 2 million shares, and the last couple of times up here with 1 million. So I'm watching this. This one's got a couple of dojis on it. So we're looking for some confirmation in some of these. Well, we're just about done with the show for today. I do want you to send out some white light to Tommy O'Brien, Tom's son. Had a little bit of elective surgery done on, I think, his arm. Nothing major. He'll be back at work, I think, in a day or two. But probably feeling just a little pain today. And might put out some white light for Tom and his son today. Although I don't think it's anything of major effort. But he's gone today. We'll miss him. Be back, I think, tomorrow or the next day. Anyway, you all have a great, safe, and wonderful day. Remember to sell when you can, like John from Philly did today. You have to. We'll be back in a moment. Nope.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.